Here's the harsh truth. Most new CPG founders don't fail because of bad products. They fail because they don't understand their numbers. I know we spoke about this before, but it's the truth and I want to reiterate it. If you want to build a CPG brand that lasts, not just sells a few cases, not just sells a few bottles, you need to track the right numbers from day one and making sure you understand your numbers to grow your business. Today, we'll cover the essential accounting basics every CPG founder must know. We're going to go step by step since that's what we do. And we're going to give it to you in plain English. I want to welcome everybody back to CPG 101 with me, your boy Eric, where I give CPG founders tips, advice, and strategies on how you could scale your CPG brand to go to the next level. So if you're bootstrapping, raising money, or you're just launching your first SKU, this video is for you because you got to make sure you understand your finance and you have a good foundation to make sure that you're growing your business to get to the next level and to get into retail, and that you have enough cash flow to make sure that you're covered and you're good to go. We're going to discuss today CPG accounting basics 101. What to track from the first day you start. So since we do everything in steps, this is step one. Separate your business and personal finances. It sounds so easy, but it can easily happen because we're doing everything and we have everything in one. We got to make sure we separate our money. Open a dedicated business bank account and a business credit card or a debit card just for your business. You never want to mix your personal and business money together because you have too much going on. You don't know what's, and you don't know how to save or spend. It keeps your books clean, of course, and it protects you legally when it comes time for you to file your taxes or anything else. And it makes it easier during tax season, like I just said. It makes it 100% easier when you have your money separated. So please, step one, make sure you separate your business and personal finances. Step two, set up accounting software. I know a lot of people are like, Eric, I'm kind of starting off. I don't want to spend no money. But don't wait till it's tax time to figure this out, because the quicker you're able to have your numbers down and have it together, it'll help you in the long run. Start with accounting softwares like QuickBooks, Online, Xero, or even Wave. They're all great for small business owners. And they'll automatically sync to your transactions, and they'll give you real-time visibility into your cash flow so you know how much you're spending, how much you're saving, and how much you have coming in and going out. If you're pre-revenue, you can even use a spreadsheet, but make sure you're not doing that for long, because even though you're doing that and you're tracking every expense from day one, that's only going to last for so long. You actually need something to keep up with all your information and your material. Pro tip, you can't manage what you don't see. So if you're not looking at your accounts, how are you going to manage them to make sure you got your money correct? Step three, know your chart of accounts. You're probably like, know your chart of accounts? Yes, your chart of accounts is basically how you organize your financial books for your CPG business. Because at minimum, you should be tracking the following things. You should be tracking your cost of goods, which would be your cogs, which would be your ingredients, packaging, co-packing, all those things. You should also be tracking your marketing and advertising when it comes to influencer spend, samples, ads, and then you should also be tracking your freight and logistics when it comes to shipping, storage, delivery, and lastly, you got to be tracking your overhead when it comes to salaries, software, rent, insurance. And then don't forget, you got to make sure you're watching your revenue for all your income streams that are coming in. These categories will drive every decision from the beginning to the end when it comes to pricing, when it comes to profit margins, and everything else. So you got to make sure you're watching everything and you're keeping an eye on your chart of accounts, because this will help your CPG business go to the next level or crash and burn. Step 4, you got to track your cogs. Cost of goods sold. You always have to track your COGS because you got to know how much you're making, what you're selling, all that. COGS is everything you spend to make one sellable unit. Yes, whatever you spending to make it, you got to be tracking. How many you sell, you got to be tracking. Of course, this includes ingredients or raw materials. How much are you spending on those to make your product? And how much are you spending on packaging, bottles, caps, labels? How much are you spending on co-packer fees if you're not making it yourself? And then how much are you spending on freight, labor, tied to production? All these things play a factor when it comes to your COGS and you're selling it. Because when you divide your total production cost by the number of units made, that's your unit cost, like we discussed in another video. Because this is how you'll set your pricing and calculate gross margin. We're in the business of making money, not in the business of losing money. You got to make sure that you're constantly keeping an eye on your COGS, because COGS equals total production. Since it equals total production, we got to make sure we keep an eye on our COGS and know what it's costing us to make it and how much we're making after we sell our product for the gross margin that we wanted to sell it for. Step 5. You have to understand your gross margin. You got to understand your numbers. We discussed this in another video, but we want to touch on it again. Because your gross margin is what's left after subtracting your COGS, which would be your cost of goods sold, and subtracting it from your revenue. Example, since we like to give examples and steps. If you sell a case for $30 and it costs you $18 to make it, your gross margin is 40%. Yes, 40%. So with that 40%, it has to cover everything. And when I say everything, I mean marketing, payroll, operating expenses. It has to cover all those things. So a good, strong CPG brand aims for 40 to 50% when it comes to margins at wholesale, and 60% margin when it comes to selling at DTC. When it comes to selling DTC on your website, you need to be having a 60% margin. You have to remember, different retailers charge different, and when you're dealing with selling directly to the consumer, you need to be charging more for your margin so that you can get your money back, because you're going to have to pay shipping and other things to get that sale. Number 6, you got to track your operating expenses, or your OPX. If you don't track your operating expenses, it's going to become a problem, because these are the costs that keep your brand alive each and every day. You gotta make sure you watch your expenses. What do your expenses include? They include a salary, if any. If I was a founder, I wouldn't take a salary in the beginning. I would wait a while. The other expenses include accounting, legal insurance, warehouse, 3PL, advertising, sending out samples, any kind of subscriptions, and any tools that you may use on your website to take purchases or to run ads or chats or anything like that. You got to make sure you keep a monthly record and always separate your fixed costs versus your variable costs, so you know what scales with growth and you know what the price is going to be as you grow. Your fixed costs, you know, I'm going to be paying this every month no matter how big I grow, and your variable costs will change up and down depending on how big your company grows and depending on how many more people you take on when it comes to customers or whatever they charge you for so many extra people on whatever subscription platform it is. Number 7, you gotta track your cash flow weekly. Gotta track that cash. You gotta know what's going in, what's going out. Revenue doesn't mean you're profitable. Please remember that. Revenue doesn't mean you're profitable. And profit doesn't mean you have cash. People get confused by that. I'm making this revenue, but do you have cash? You got to remember that. So you got to track these 3 things weekly. You got to track your cash and sales, cash out, meaning expenses, inventory, payroll. Then last but not least, you got to check your cash runway. How long can you operate before you run out of cash? You got to know that. You got to know your runway. How long can you keep the doors open before you have to close? If you don't know your cash runway, you're flying blind. And nobody wants to fly blind, because you know what happens. You usually always crash. Another pro tip, always have about 3 months of expenses in reserve, just in case a PO comes up late or any kind of chargeback happens. It's good to have 3 months worth of expenses saved up. If you're able to have 6 months of expenses, That's even better, just for those rainy days or those in case something does happen type of days. Step 8, keep receipts and documentation. Please, when you have a business, you got to keep everything just in case you get audited. You got to make sure you keep every invoice, co-packer bill, and expense receipt. Just in case somebody tries to challenge you on something, you got it and you're ready. It's best to use a digital system like Google Drive, QuickBooks, or a Dropbox folder to organize each thing or each receipt each month. Because in the long run, you'll thank yourself during tax time. Or, like I said before, if you ever get audited, you'll thank yourself later on that you did the proper preparation now so that you're prepared for later on. Make sure you keep up with all your receipts. Make sure you write them down. Make sure you take a picture. Make sure you keep them on your Google Drive, Dropbox, or any other accounting software that you're using, so that if anything happens or anybody says that you didn't pay this or you didn't pay that, you have all your receipts up to par and you have them ready, so that if any problem comes your way, you're prepared. Number 9, hire a bookkeeper early. If you can afford it, hire a bookkeeper. Because even though you're great with spreadsheets, hire a bookkeeper. Even though you feel like you're great with math, hire a bookkeeper. Because like I said before, if you can afford one, it will come in handy. They'll reconcile your books, they'll reconcile your accounts, they'll categorize your transactions, and they'll prepare monthly financials so that you don't have to spend a lot of time doing that. What this does is, since you're not spending a lot of time doing that, it frees you up to go out there to make your product, sell your product, or to go out there and market your product so you can get new customers in. Step 10, review your financials daily. Yes, daily. You should schedule at least a 30-minute meeting every day, even if it's just with yourself, to go over your numbers. Because it's better to catch it now than to catch it later. And this review, you should review your profit and loss, P&L. You should review your cash flow statement so you know what's coming in, what's going out. You should review your balance sheet so you can make sure everything's good, everything's being paid off, and what you have coming in. And then you should ask yourself this question: did we grow revenue? Did our cost increase faster than our sales? Did anything go up? Are we spending more on anything? Do we have enough cash for next month? What do we have in reserves? How much money did we save? Because when you ask these questions, it creates a habit. And this habit allows you to become a CPG founder that constantly knows their numbers, and you're constantly making sure that your CPG business won't be a business that will crash and burn. Instead, it will rise to the occasion and grow and go higher to the next level. To wrap it all up, real CPG founders know their numbers. Ones that don't are just hobbyists, and they just going with the flow. Always remember that. Always remember, real founders know their numbers. You have to remember, numbers don't lie. People do. They tell you where your business is really going, and they tell you where your business has been. Because if you want to go to the next level, you have to start tracking from day one. You'll make better decisions once you start tracking. You'll also ask questions. Then you'll be able to raise capital. And then you'll be able to sleep at night because you understand where the money's going, where the money's coming, and how much money's going out, instead of just closing your eyes and trusting somebody else that they're doing the right thing. Because that's how a lot of businesses get robbed, especially CPG businesses, because you're trusting someone else to do the right thing and you have no idea what's going on in the books. Make sure you always track your books, track your numbers daily. Just take 30 minutes to look at everything so you know what's coming in and what's going out. This has been another episode of CPG 101, of course, with your boy Eric. And if you enjoyed this video, please hit the like and subscribe button. And please make sure you share this video with any CPG founders you know, or anybody that's working in CPG that's thinking about starting their business. Because like I always said, this is a community, and we're here to answer any questions we have. We're here to have positive discussion, and we're here to help each other out no matter what's going on. The CPG world can get lonely out there when you're starting something, and a lot of people might not know what's going on. It's very important that we understand that we're here for each other and that we're each other's accountability partner. Please Like and subscribe, and share this video with all your friends and all your CPG founders. Lastly, it's me, Eric, Mr. CPG 101.